I'm going to be explaining to you how you can take entries using market structure. So shall I use the portrait? Okay. So if you're to buy, price has to go above your area. So this is an area. If you're to buy, price has to go above. This is where buyers are, right? Simple as that. But for structure wise, once price makes a high, it corrects, and then makes a new higher high, it corrects, and then makes a new higher high, it corrects. The only way that price can switch structure is by breaking these levels of support. So you have this higher low and also this higher low. So the only way for price to sell, it has to now break this structure. So it has to go from this to this. Are you seeing that? Now, given all that confluence, I wanted you to understand something very brief. When price is buying, you don't necessarily have to wait for price to break above this area so that you can buy, because you know that, for instance, if this is the H1, price made this level of support, and then it's starting to climb up. You can buy here, okay? You can buy here as it's starting to climb up, and then you can hold until price makes that new high. It's not always a must that price has to come above. No, we just use probability because we won't know exactly when price will shift, but we shall know the entries. Let's say this is the H1, so you go to the all-time frame like the M5. Now for this whole move here, the consolidation move, the one which is correcting, it can be something like this. We are selling, okay? See that price is making these mini higher highs and higher lows, higher highs and higher lows. So lower highs and lower lows, right? Until you have this break. Now this is the most important part. Once you see the structure shift, we are selling, but now structure shifts by making this higher high. Most of the cases I advise that you wait for price to maybe make a mini pullback, and then once you're above that same level where we saw the shift, you can take your buys. But that's not always a must. As I've told you, price can simply just move, okay? It may not pull back, it may just move to the upside. I think most of you guys will be caught up, but oh, what about waiting for price to make this consolidation? Okay, you don't have to worry about that all the time. You just have to be keen on the structure shift, because remember, our aim is to catch this move to the upside. Okay, we had that high that was made. After the consolidation, there's gonna be another indication for price to go above to make a new higher high. Okay, so once you have a shift here on yellow time frame, this is the M15. Once you have this shift in the yellow time frame, you can position your trades. You can enter your buys here, stop loss just under that level where you saw price shift structure, and then you can aim for at least a 1 to 2. As simple as that. You don't always have to have this massive sell off so that you can get your entry. Let me show you a bit. So I'll go to this entry over here, and I'll explain why I took this sell on V75 index. So this was a sell for 15, and I took this sell somewhere in the morning. So the reason for entry here, as you can see, the structure is bearish. So in a bearish structure, what we want is for price to make these higher highs and then the higher lows. So I shall use white. So you want to see price making lower lows and then lower highs. Okay, that's what they call a bearish structure. Now for you to capitalize, you have to wait for this correction to end, and then after you start to enter in your sales after the correction ends. For instance, I won't complicate it so much. we see that here price was selling. Okay, then after it reached here, we had this pullback, and then after that it continued down. We would have caught this trade from here if you're observant enough and patient. This is a weekly time frame, by the way. If you observe up here, it's a weekly time frame. So I don't think you would have caught it like every single week. You would have waited for this pullback. No. What you could have done instead is that you would have gone to your like the daily time frame, because most of you guys trade on the daily, the H4, and some of you trade on the M15, which isn't bad, but you end up having so many wrong signals. So anyways, you see that price made a drop up to here, right? So this is what the lower low, and then here it made a what, a lower high. So how do you know when the structure is now starting to shift? You know that sometimes I advise that you wait for price to come under this level where it showed you the indication. So if you guys can observe, under here we see that price came, it made this correction. So that means there are sellers under this area who are weakened, right? So there are sellers under this area of support, so that we can see that once price came above, we had this sell off. What does that mean for my entry? In my entry, all I want to do is to see something like this on the daily time frame. I want to see price become bullish on the daily. Then I want to see a shift when price breaks. Then I can sell off. For instance, I could have caught this area from here. This could have been a good entry. Okay. Remember, underneath this area, there are sellers. Okay, and they were able to take price all the way up to there. If you observe those three candles to the downside, that's how strong the sellers were. So the second time that you come under this level, I'm expecting the same thing to happen. That price will likely have a sell-off towards that region. Let me give you another example. So this was my back testing from the previous. Let me just give you this example as well. So this was my back testing, and I was using the M15 as my time frame. So for this one, I want you guys to observe that we have this low that came in the market. So you have this low over here, alright? So this is what they call the higher low, because the structure is very bullish, right? If you observe, price is bullish. So we first of all broke out of this high to make a new higher high, and after price made this new higher high, what did it do? Went for a correction move. If you guys observe, the correction move ended at around this area of support. So around here, that's where the correction ended, and then we started to have that massive build up. So here I would have entered even here at this area over here. This is where the structure shifted, because we are selling. Remember, the structure is like this, selling, and then we had that break, and then the continuation. So you could have entered in your sales right away, right? Your buy, sorry, right away. Remember, we are selling, we have a lower low over here, we have a higher high, but what happens is that price ended up price ended up taking out that higher high. So price ended up taking that higher high. I don't know if I'll find that thing. Okay, I'll just use another example. Perhaps this one will do. Okay, so for this example, we're having the same issue. I want you to observe that this is GBPUSD and this is the H1. Okay, we are dealing with the H1. So I already marked out my zones. So you see that price made a higher high. So we have a higher high over here. Price already made a higher high. So once price makes a higher high, sorry, you can just call it a high. So once price made this high, what happened? It went for a correction. Okay, have this massive correction, and then this correction, good for us, we had this level of support. This was the first level of support that we had in the market. Now what created this lower low was this area over here. Alright, so we had the first indication. Once price went above, that was the indication it wanted to go above, and then you would have waited, perhaps we have pulled back, but this market was a bit I can see that there was no clear direction. If you observe in between these areas, price was consolidating. Okay, so it wasn't so clear on where you can take your entries. But let me just show you why I took this sell. Okay, so as you can see, we have this new lower low, and also we have a higher high. So we have a lower low over here and a higher high. Okay, so the only way to confirm whether the structure really shifted is by price breaking either of them. It has to break above to give us the indication that it wants to continue buying, or it has to break below and give us the indication that it wants to sell even more. Right, because we have these areas over there which are potential targets. But price never did any of that. Instead, it was consolidating. So most of the beginner traders, people don't know structure, they are confused. Sorry for that. So for people who don't know structure, they're usually confused when they see something like this. We see that we had a level of support, so they're like, hey, but this is a level of support, we broke it, which is good. Price really indeed came and broke to make a new what? Lower low. But where's the higher, where's the, because remember in a bearish structure, price has to form higher high, sorry, price has to form a higher low and then a lower low. That's the only way that you can have a what? A bearish structure. But now, fine, we have the new lower low in the market, right? We have the new lower low, but where is the new higher low? That's the question, okay? Because you see that price has already given you the indication for even a new what? Higher high. So in such instances, what I advise you to do is that you can either wait out the pair to play, give you the correct indication. But in my case, usually you can even just stack in your entries, because you see that we have a new lower low, which is fine, but then price came and made a new higher low, because this low is greater, is higher than the previous low, so it's a higher low. And since we're in a bullish structure, once price makes a new higher low, that's the first thing that it wants to continue the bullish momentum. But so far I won't confuse you so far with that. Let me just use a clearer example. So we have another trade over here. This was gold on the M1. This one, this was a nervous entry, but so far from the market structure, price is extremely what? Bullish. So from the previous market structure, price is what? Extremely bullish. If you observe, price is buying, very bullish, right? We have a very bullish channel. And some people trade this channel in such a way that after you have the breakout, and then they hold until price reaches to the bottom part here. But for me, I usually don't want to trade patterns because the price itself is random. Therefore, your patterns can easily be, for instance, someone who had like someone could have come in here and then seen this pattern, okay, and then they'll have been like, oh, but price has to, like, buy. Of course it went to buy, and but patterns aren't so consistent. I usually love to trade structure because structure is always consistent. The price is either making higher highs or it's making what? Lower lows. And if it's not doing either of these two, it's either consolidating, just moving, ranging, okay? And if you don't have any of that, then we are not in a market. So if price is making lower lows, okay, and then it's making higher highs, making lower lows, and then shifting, and then that's the consolidation market, and I don't usually trade that. I want to see clear structure, because structure will tell you that this is a higher level of support. You have a higher level of support over here, and another higher level of support over there, and therefore after we have this breakout of this high, what happens? Price always goes for what? Some bit of a consolidation. Consolidation is not even just a consolidation, but it's to just take out liquidity so that you can have enough momentum to make the second move. if you observe, this is what I mean. So price has this move, it pulls back a bit to grab liquidity in the markets, or to grab orders, in fact, and then have that shift, and then afterwards price continues up to the upside, right? But this is not always 100% like guaranteed, because sometimes it may grab liquidity, gives you even the break of structure, and then it may just sell off. You know, this is a possibility, bro. This happens, but the high probability is that it will, if it is a bullish market, especially in the high time frames like the H4 or the H1, price is likely to obey the structure and continue for that push to the upside than for it to just sell off, because it takes lots of money for price to move from this area up to here. Therefore, since it took lots of money, that means that to break this structure, it also costs the market lots of money. It needs lots of orders to break these structures. Therefore, if price comes and breaks a structure to the upside, it's not just simply a random thing. There is momentum, there is a motive, right, behind the movement. Although the markets are random, because we can't predict when that motive is going to be in the market, but we can know that given the probability that there was buyers in the market before, we may have that same indication for continuations. Okay. Okay, so I don't want to confuse you a lot. I'll just remove some of these. So we can use this. We see that this is a level of support. We have another level of support over there. We have another one there. We have another one there. So these are all structure points. You can use them to your advantage if you're trading. But I won't. Let me first remove everything. Okay. So we shall go with the landscape again. So let me just use like a form of pictures so that you can show you the whole concept behind this. Okay, I shall use this image again. Now we have this image over here. This was USD on the daily time frame, and I was a bit confused on whether to take entries for buys or take entries for sells, but I'll just clarify something very brief for you before I even go further. So we see that price has been let me first go to color or shoes blue this time. So we have this high which was over here, then price came and made this level of support. So after some time, we see this is the daily time frame, my friend. Remember, I want you to remember that. So we have the high. So this is the high, and then price made a low. Okay, but then after some time, price came and made this what, lower low. So once price does this, in most of the cases, this is what happens. It's usually going to be a very long consolidation. Okay, because we have this high over here, and there are very many impatient traders. There's so many traders that are trying to just catch the next big move to the downside or the upside. They want to be in the market every single time. They want to catch every single peep. Okay, they want to catch every single move in the market. And since the market knows this, it will usually create instances where they tilt. The word is tilt. Okay, tilt is when you become emotionally attached to any entry. You become emotionally attached to any trade setup. You become emotionally attached to every single movement in the market. With tilt, usually what happens is that market can give you like 3 losses in a row. So it messes up your psychology first of all. Then it reduces the setups. So it reduces the setups you have in the market. And if you combine the losses and then the reduction in setups, most people enter survival mode. They can't think of anything else to survive. Okay, so once people enter survival mode, what happens is that they usually overtrade, they over leverage, they do all the crazy stuff, because in survival mode you want to grow back that account. You want to risk 100% of the account on every single trade, which in the short term it may seem logical and gratifying, but in the long term it won't be maintainable. So for instance, if I'm to buy here, my system tells me that if price makes a high and we correct, I want to see price build up. Okay, so if price makes a high, it corrects and then it breaks this structure. It tells me that price is not ready yet to be met with the, it has not gathered enough liquidity to have the next massive push. So we see that instead of price continuing to the upside, instead we shall have this Miagra push the downside, right? And if I'm given all that information, I know that price shouldn't always just uh, come up. For instance, you see that this was the higher low, right? So you have the higher high, okay, and then you have the lower low over here, lower high, sorry, because it's lower than the previous high. And then after the break, we have a new what, higher high. But if price fails and instead just sells off, then that means that our structure was not respected, and that's okay. We can always close out the losing positions, and we can call it a day. All right, it's not always a match that we have to win. But as I've told you, price will take lots of money. It will take lots of cash and lots of time on the high time frame for price to break this structure. So if price breaks this structure, that's already an indication that it wants to do what? It wants to sell. There are sellers who are willing to push price lower. So it's not always a must that price should always respect your structure, right? We see that price came, made a, this is what, lower high, and then decided to sell off, and then made this new lower low. So all these factors, you can combine them to have a very profitable system for your trades. So I would recommend you that you don't. It's not, I'm not saying that you can prevent a tilt, because tilt happens to almost everyone, even the professional traders. They tilt sometimes, right? Even me as a professional trader, I also tilt. Okay, I have some moments where I tilt, right? So it's not always a must that you shouldn't tilt, but you should reduce the instances of tilt. For instance, you should know your triggers. You know, for instance, by triggers I mean that if you know that if I lose 3 losses, if I take 3 losses in a row, I'll have a tilt. I'll have a higher probability to go 100% for each position. Then you can reduce that. For instance, the moment you reach your second stop loss, you maintain a system, put a system in place to remove you from the charts. Put a system in place maybe to, if you're to recover, you go with a low risk, alright? But there are some people who do this the opposite way. For instance, some people, they'll put strict guidelines. They'll say that if I hit 3 stop losses in a row, I will stop trading for the rest of the month. If you're just starting out and you haven't yet been using this rule for the past maybe 5 years of your trading journey, this will start. Your mind is always going to be against you, right? Because, sorry for that, if you put 3 losses, and if you say that if I take these 3 losses in a row, right? If I take 3 losses in a row, right? And in these 3 losses, I don't have any setups for maybe that day. No setups for that day, right? So if you combine these two factors, you already have 3 losses in a row, and then you have no setups for that day. What happens is that price, you always look now for these low probability setups. For instance, in low probability setups, they're usually remnants of how you used to trade in the past. So if you used to trade like these trend line breakout strategies on the M1, maybe the M2, these are fine strategies, but once you have the tilt, you're always wanting to always take that entry, because it's first of all, it's a low probability setup. That means that price can easily disrespect the structure and then continue to reverse. And thirdly, they have no limits. Okay, you can take as many as you want. But with the high time frame trades like the H4 or the H1, the good thing with these time frames is that the setups take time to mature. That's the first thing. So they give you time to think, and secondly, they also give you time to analyze. Okay, so these setups on the H4, why they are better than the setups on the M1 or the M5, is because they take long to mature. When something takes long to mature, it gives you critical thinking. It improves your critical thinking skills. Alright? Because just imagine you are using your intuition all the time. You are straining your mind to use the M1 every single time. So what happens is that price will just simply, if you have, for instance, the people who trade trendline breakouts on the M1, of course now they can be profitable now and then, but what happens in most of the cases is that price will give them that trend line, and then it will reverse. They'll hit a loss, and then they'll be like, let me just trade for the next trade. So they wait for another small setup. They do the same thing. It stop loss, setup, stop loss, setup, stop loss. because there is that recurring factor that you can easily enter in and out of trades. There is no conviction. You don't have any self-analysis. Your critical thinking is shattered, right? I'm not saying that trading the M1 is bad. I'm just saying that you have to consider some factors. You have to also analyze how you trade as a person. How much time do you have in the day? Because you may find that the H4 may not be suitable for everybody. The H4, the H1 may not be suitable for what? For everybody. And in most of the cases, actually, you may find that there's some people even make crazy amounts of profit. They become profitable just trading the M1 or the M5. What I'm saying is that if you're a beginner trader and you're just starting out in the market, it's very crucial that you start off with something that where you can analyze. Okay, you want to be able to analyze the market, right? Analyze. Okay, then you want to also be able to structure your trades. All right, you don't want to just put a random stop loss and then a random take profit. No, you want to have a reason, a why. Okay, even though it's a weak why, even though there is actually, you may just be trading just because your cat said meow. Okay, that why is what's going to make you consistent, because it may just let me just say I've entered this trade. So if you're to ask me why I've entered this trade, so if you pose this question to me, why have you entered this trade, I'll tell you that I've entered this trade because on the H4 I've seen a structure shift, right? Price has been buying, it has been selling for our instance on the H4, and then we've had the same region where we saw sellers come into the market. So that's a reason to sell. Some people complicate it. They have so many reasons. They have like 10, 14 reasons why they're trying to take us a sell. No, you don't have to complicate your charts. Just look at your H4. For instance, my system, I look for the H4 or the H1, whatever time frame suits me best. By whatever time frame suits me best, I mean that I want to see structure. So if the H4 doesn't give me clear structure, I'll go to the H1. If there is no clear structure in the H1, then I'll go to the what? Daily time frame. If there is no clear structure in the daily, I'll go to the weekly. Why do I use all these time frames? Because I want to see where market is headed for in the long term. The long term game is what is going to keep you alive. Okay, long term game is what's going to keep you alive. So given all that, I'll go back to my initial point that if you're to trade a structure shift, if price is going to be selling, right? The reason for why, if you ask me, Kevin, why are you selling here? I'll tell you that price on the H4 is what? Bearish. Okay. On top of that, on top of being bearish, we are under a low. Okay. And on top of being under a low, I've entered my sales here because I've had confidence. Have confidence in this trade, right? It doesn't matter whether the trade comes out as a profit or a loss. What matters is that I've had all my criteria met. That's the first issue. Now, once you have this few, it doesn't have to be like this, because the issue that I see that most people have is that they have this unrealistic list of things that they want the market to do. So most of people use indicators. So they will say that they want my moving average to be above maybe 50. Okay. Okay, and then that's okay. And then they say I want the M1 to have shifted by maybe 30 points. On top of that, they want the M5 to have shifted structure, and on top of that, they want to wait for a fair value gap to be filled. So all these factors, they're not consistent. You're not building consistency. There's no consistency in any of this, because remember, consistency are simple rules that you follow that just mere observation of the market, you know that here I would have taken this setup. Okay, because now if you're telling me that you have to wait for a fair value gap on the M1 to always be filled, you're going to have a psychological dilemma. Okay, because you're going to be trading against yourself. Okay, you're going to be trading against what? Yourself, because you have so many things. You have so many criteria. Let's say you are choosing a wife. Just imagine you're choosing a wife, and we have all these petty criteria. I want someone who is looking beautiful. On top of looking beautiful, they have to have like 5 figures per month. The judge is like, okay, what else? And then you go on to make this long list. They have to wear heels on Sunday. Their parents must be from Michigan. All that information, you are clogging the decision making, because I remember decision making, the criteria for decision making is that the more simple you keep your decisions. So the simpler the decisions, the more likely you are able to what? Execute. You won't have any brain fog when you're executing. Okay? You won't have any brain fog. By brain fog, I mean hesitation. You won't hesitate. So have no hesitation. Okay? No hesitation. No hesitation when you are executing. And all this ties down. It all comes down, okay? It will make sense if you are able to practice over and over again, but also it will make greater sense if you start to not just, you must have some fun when you're trading, because some people are obsessed with trading. They want to have all these perfect entries all the time. They want to have, you can be picky about your trades, but you don't have to always have this fixed mentality that price will always, just because you're in profit. Some people have this fixed mentality, and that's what's keeping them from achieving their goals. Okay, they have this fixed poor mentality that price always has to do what? Price has to go above a certain zone. Okay, we are back, we can write. Okay, so they have this mentality that if I'm to buy and price goes against me by maybe $500, let's say I have a $1,000 account, 1K, okay, and then price goes against me by, let's say, $500, the tilt is likely to happen once you have this massive risk and it's not compounding. The tilt, what I call the tilt, is going to happen to you very fast than you know. The tilt is simply when you have a $500 account. No, let me just use the 1K. When you have a $1K account and you have a loss of $500 in a single day, that tilt is gonna be instant, because you'll be like, why should I even? Let me just risk everything. Okay, you're gonna have let me just risk everything attitude. We call it the fuck it attitude. Okay, the fuck it attitude. In the fuck it attitude, you're going to lose lots of money more than you anticipated. Let's say for that day you had 1,000 as your stop loss. Okay, so you open up your account, you place the 1K, and then the market goes against you by, let's say, $100. So you're down to $900. But of course now that $100 will feel, you'll be like, I can recover that amount. But let's say the next trade also takes you out. You're trading gold for this matter. So you take from 900, you go up to, let's say, 800. I'm not judging, I'm just showing you how the tilt happens, right? So if once you go down to $800, some people have, they usually, the mind usually collapses, because it collapses into two things. Is my strategy wrong? So do I have a wrong setup? Is my strategy wrong? Is my strat wrong? Okay, that's the first question that comes into their heads. Is my strategy wrong? And then once they see that the strategy is right, maybe like the setup was valid, then they will ask themselves, is this because I'm a bad trader? Okay, so they have that, you have that loophole that if you lose, so you may even program it, if I lose, I'm a bad what? I'm a bad trader. And if I'm a bad trader, I should therefore look for what? Look for new information, look for new guides. This is the loophole that keeps many people trapped. And when they look for the new strategies and they again lose, they repeat the same cycle. So it's like a lose, bad trader, and then look for new strategies. And this is the loophole that keeps so many traders trapped, because they can't. Some people can break this loophole within a year. Some others can even take 5 years. For me, it took less than 2 years I was above this loophole. And then for some people, it can't even take 1 month. There's some people who are just, they are so in touch with their emotions that they can outlast, they can outgrow themselves, right? And it's really, it's just like I'm competing. You don't have to compete with anyone. You don't have to say that you have to, it has to take exactly 1 month or like one day. No, it can take time. Sometimes, well, the reason why it takes time is because we have what they call psychological beliefs. What do you believe about yourself? Okay, what exactly are you trying to achieve in yourself? What are the core principles that you are following in your trading journey? Okay, so believe, what do you believe? For instance, some people, you can say, maybe I believe that I'm a good trader. Okay, so you believe you're a good what? A good trader. And then on top of believing that you're a good trader, you may believe also that making money means I'm a what? Means I'm a good trader. Now, at surface level, this doesn't even seem a bad thing, because if you make money, that means you're what? Good in trading. But now you have to think. You see, the mindset behind money making is that if I am able to make money, that means I'm a good trader. But the issue is that any profit that you make will always be tied to your identity. So every trade that you take is like a reflection of whether you are good or bad. So every trade becomes a reflection. It's like a mirror. And the thing with mirror trading is that every trade should always feels as if it's the one. I'm trying to break this down to the simplest level so that you can understand the psychology behind your beliefs and how they can shape the way you trade. Okay, so every trade feels like a punishment. So every loss feels like a punishment. You've been taught like so many times, even when you come to the trading world, they will tell you that you have lost money because you are impatient. So they tell you that you're impatient. Okay, some will even tell you that, hey, you have lost money because you're a beginner trader. All these narratives, they all shape your subconscious. Your subconscious doesn't know anything about what it means to be a good trader. It doesn't know anything, because remember, the subconscious is just like a student taking down notes. Okay, so if we have your subconscious, if you had your subconscious mind, so if this was your subconscious, just reduce the pen a bit. Okay, let me see. Okay, this is better. Maybe just a bit. Okay, so if this was your subconscious mind, it will just take down notes. So if you say to yourself that this trade has to work out, because if it doesn't work out, I'm a bad trader. So that if mentality that you have within you of tying the trade to your identity has to do also with your personal life. You have to analyze your personal life as well. So you see, trading actually, it brings out the your personality. Most people ignore this because this is actually very boring. People, when people come into the market, they want to be told that, hey, this is how you make money. You sell under here, price comes under here, you sell, and then you make money. They want the quick what we call it, the quick fix mentality. Okay, so they want the quick fix mentality. In this mentality, everything can easily be solved by by an easy solution. Okay, so they will tell you that, hey, I'm not making money in the market, but look at us, we're making money. How do we make money? Well, we use some indicators called the moving average. I'm not saying the moving average is a bad indicator. I'm just saying that they invent many ways to keep you trapped in this mentality that every single trade that you take, it has to be a reflection on you. So if you lose $50 on a trade, it has to be something about you. It says that has to do with how you process information. It has to do with your greed. It has to do with, so every trade is a judgment. It's like most people actually, they don't even just quit trading; they quit themselves. Okay, when you see someone quit trading, you may be surprised to see that they are broken down mentally. They are broken. Most people who quit trading, mentally they have become destroyed. Not just broken, but destroyed. You know what it means to be mentally destroyed? It means that someone came with, first of all, very high expectations. I'm not saying that you shouldn't have goals. I'm just saying that you have to be realistic. I'll just clarify this in a second, but I want you guys to know the essentials of the market. No matter how good a system is, no matter how good the system is, it won't have 100% profitability. There's no such thing as 100% profitability. Nothing like that. We only have what they call winning streaks and then losing what? Streaks. So someone who has 10 trades in a row, which win, can be confused for someone who has 100% profitability in that strategy. But the main concept that people miss is that there is no such thing as 100% profit win rate. Okay, there's no such thing as 100% win rate, because if you have a 100% win rate, the system is always fixing. So the market is always fixing the errors. Remember, every strategy is exploiting. You're exploiting the market. There are rooms. Trading is actually exploiting gaps in the market. You're exploiting gaps in the market. Okay, because for market to be efficient, sellers, the demand has to be met. So, for instance, supply and demand should be in equilibrium for the market to be what? Efficient. But because the market is not 100% efficient, we may have instances whereby supply is greater than what? Demand. You can capitalize off of this, okay? You can capitalize off of this, just this, that supply is greater than demand. You can make lots of money just off of that small concept. But the issue that we have is that people are nowadays controlled. They're not just controlled, but they are into the mentality that every trade they take, every trade is a reflection of them. As I've told you, it took me 2 years to understand this point. It can take you 5 years, it can take you 10 years, it can take you 100 years, all right? But in this market, it's not about learning the psychology and no, it's about implementing. Implementation is the key word here. Implementing. If I had $10 as my last money in my savings account and I put it in a forex account, okay, if I made money from this $10 account, okay, and for instance I took this $10 account to maybe $500, it would make me happy. Now, would the success of this trade mean that I'm a good trader? If I'd lost a $10, would that imply that I don't know how to trade? I don't know if you get my point. As I've been telling you, we have what they call a tilt in poker. A tilt is when someone loses it. They have that what they call, because people want to always have this carefree environment. In the carefree environment, you have no rules. You have no rules to guide you. So you have literally there is no rule to guide you, and yeah. Yeah, anyone, yeah. Okay. So, I've been saying, if there's what they call tilt. So this is a term in poker. So sorry for that. I was just talking to someone. So there's what they call what? Tilt. Tilt is characterized by someone at the point of losing it. So this is characterized at the point of losing what? Of losing it all. In tilt, what causes tilt? There are several factors. Sometimes to have a tilt happens almost if you're in businesses where there's lots of uncertainty, because uncertainty, psychologically we are meant to be we seek certainty. Psychologically, every human is built to seek certainty. You want a secure plate of food, you want to have a secure salary. That's why 90% of the people work. They go to jobs that they hate and they work their asses off, because there's what they call a guarantee. You want to have a guarantee, okay? That's the first thing that you want. Guarantee. You want to have that guarantee, that sure win that you're going to have that money. That's why we say that people have been working for monthly salaries for years, for decades, centuries, because there is always that guarantee that you're going to receive that paycheck at the end of the month. If you don't receive that paycheck, you're going to have a riot. You're going to go on a demonstration, just calling out your boss's names and all that, because now that guarantee there is for majority of the people. That's why trading is not for the majority. Trading is for entrepreneurs. It's for people who, because for entrepreneurs, they're not just risk takers. They're people who embrace uncertainty. Okay? To embrace uncertainty doesn't mean that you jump in front of a car. No. Or a speeding train. No. It means that you are able to ascertaining risk. Okay? Ascertaining risk. You know how much risk you are willing to take. So the risk factor is what will keep you alive, and survival is what will keep you more healthy. So once you combine risk and survival, you'll be a healthy trader, right? You'll be a very healthy trader. But if you become trapped into the mentality of thinking that you're always gonna be better than the market every single time, you are working against yourself, because this is what happens, and this happens lots of times. Okay, this is what happens in most of the cases. In most of the cases, what happens is price will be, let's say it is the morning, okay? So I take a buy maybe like on gold, because I see that it's over leveraged and it's selling a lot. So I'll be like, hey, gold has to sell. So gold has to buy, right? So I take my buys here, I put my stop loss just underneath here, and then I'm just waiting for price to hit my TP above. So sometimes this happens also. Price just goes into your TP. It goes as if it's going to hit your TP, and then it reverses until it reaches your stop loss. Now, that tilt usually happens in most people. The tilt happens here the first time they see that their stop loss has been hit and price has been going in their direction. They become guilty. They become guilty of their actions, and this guilt, it turns into self-hate. Okay, this is all subconscious. You can't even notice. Someone does not even notice all this, but this is so powerful that people even ignore it. They think, oh, the market was bad today. Oh, but these small things are the ones that are eating up your profits. Okay, you are eating up your own profits because you're not able to capitalize on your emotions. You're not able to capitalize on what the market is giving you. Instead, you are falling into guilt trips. Okay, you are blaming yourself for trades that went wrong, and you're praising yourself for trades that went right. Okay, the moment praise and guilt, they all come from the same emotion, which is what? Recognition. So you want to be recognized for your trades. You see people on Instagram, they post making $5,000 in a single day, 10K in a single day. So you also want to be part of them. But the issue is that you start sabotaging your own
growth. You sabotage your own growth. All right, so you have to be very careful of that. You don't have to sabotage your growth. So what I'm saying, you don't have to sabotage your own growth for the entertainment of others. Because just let's face it, everyone has a limited amount of time on planet Earth, okay? Not everyone is going to be alive in the next 100 years or the next 20 years or the next even 5 years, okay? And this is just a fact of life. Not everyone is going to be there for you. Not everyone is going to be clapping for you. There are millions of people who are being followed on Instagram, and none of them gives a shit whether that person is alive or dead. Following clout doesn't mean anything to me. I don't know if it's just part of my psychology, but I think that the reason why I don't really care about clout is that I follow some guy. He was called MJ DeMarco. If you guys have ever read any of these books, he has some amazing content. So in the Millionaire First Line, you see that he struggles with addiction. He struggles with breaking out of the image that he had created for himself as a kid. All right, but the moment he breaks out of that image, the moment he makes his first million, there's a psychological shift in him. Okay, what I'm teaching you is that you can go beyond your psychological limits, not just by achieving the first $1,000,000, no, but by first mastering your psychology. First master your psychology. And the truth to the matter is that no one can really master their entire psychology, because there are so many parts of you that you are ignoring, so many parts of us that we ignore, so many parts of us that we cherish, so many parts of us that we praise. And with trading, it's just you versus you. So in most of the businesses, let's say you are owning a shop. So this is your shop, right? So you can always blame, sorry. So this is your shop. Let's say this is your shop. So you can always blame the profits on your shop. You can blame it maybe like on the thieves. There are thieves who can come and then steal your shop. Okay. You can blame it on the government. The taxes are high. Okay. You can blame it on the neighbors, because they have also shops. There's so many things that you can blame on for your shop, right? But the thing with trading, the main issue that we have in trading is that it's you versus you, right? It's not like you are competing against any single person. You're just competing you against you. And because of this, many people crumble. Why do they crumble? They have a weak psychology. I'm not saying weak just to mean that they are not thinking right or they're emotional. No, I'm just saying that they're not able to push through their pain. Most people can't push through pain, okay? So they can't push through their pain. And that's the reality of fact. That's a fact. Most people can't push through having to see their children die, or having to see their parents die, or having to see... They can't go through trauma, okay? Because for some reason, it's not always the fact that because I've gone through trauma, also someone else can go through it. No, what I'm saying is that some people may just be not conditioned. They may not just be conditioned for that level of what risk. And the issue with this is that social media has given so many it has given so many acknowledgement. It gives so many acknowledgement to success, to power, that it usually excludes reality. Because the reality is that most people actually won't be alive. Death is going to occur to everyone, right? So even me who is talking, I'm going to be gone one day. That one day can be tomorrow, it can be now, it can be the next day. It doesn't matter. What matters is now that everyone has a what? Limited time. Okay, you have a limited time on earth. You have a limited time to walk through space and time, whatever that is. And all you have to do right now, if you are to trade, you don't have to set your mindset that, hey, I want to make $500,000 today. No, set your mindset on growth. For me, I prioritize growth over fixed returns. That's why sometimes you see people stuck on a single job. They get paid maybe 150K per month. No, let's say they get paid maybe let's say they get paid $5,000, but they can't think of any way of investing this money because they have become so conditioned. They have become so comfortable. Okay, they have become so conditioned, comfortable. They have become so attached, all right, to this that they can't think outside of what they are usually given, right? And this creates people who are not risk takers. It creates consumers. To be a producer, you have to also be to be a producer. You have to consume less, right? You have to have ways of replicating, taking risk, right? Now, in taking risk, of course, we have so many elements to. Some people confuse taking risk and, of course, now there is no single guide. The thing that I learned, the basic, because for me, I love the basics more than these manual guides of how to make an aeroplane. No, I love the basics. So, since we're not making an aeroplane and you're not building a rocket science engine, sorry, not an engineer, engine, we can start off by saying that trading is simple. It's so simple. In fact, trading is so simple that if you trained a kid of maybe 5 years, in less than 10 years, he would be a successful trader. By success, I mean that they will be consistent. They will know when to enter and exit trades. Of course, it may have that child may have some losses here and there, but they will know when to get out. For me, the way I define success in trading, so my success in trading is when I'm able to do these five important things. The first thing that I'm able to do, I'm able to have the entry. Where am I getting into the market? In the entry, I have my whys. Where am I getting into the market? At this moment, what's the volume? All these reasons, the simple reasons. Where am I getting to the market? Right, the entry. Second, when I know my exit. Some people can have the entry mastered, but they don't master the exit. Someone goes into a loss of $5,000 on a 10K account, and they freeze. They just freeze. Their mindset freezes. They go into the tilt. Tilt is when you have this fuck it attitude, right? And then the third concept that I have less tilt. So the basic. So that's the third one, that I know my entry. I know where to enter in the market, right? I know where to exit, right? And I have less tilt. By tilt, I mean that if I'm in drawdown of, let's say, 80% of the account, I don't go into the fuck it attitude, right? I can easily close out the 80% and remain with the 20% of that account. And then I'll withdraw and then decide what to do later on. But I won't have this mental breakdown of, oh, fuck it all. Let me just go full margin and lose everything. No. As I've told you, I have the entry, I have the exit, I have the less tilt. I'm not saying no, not tilt, because as humans, we experience these sudden bursts of adrenaline. We have these bursts of cortisol. We have these bursts. All these emotions always come, right? So our aim is not just to eliminate it. Our aim is not to eliminate, but is to simply acknowledge them. You see, when you are in trading, you have to look for bits of psychology um, to master yourself, right? So by having less tools, I'm not saying that you go robot mode. No, what I'm saying is that you recognize your weaknesses instead of fighting against them, because some people do the opposite. Someone will have, let's say, a loss of 50,000, maybe they have 100K account, okay, and they lose 50K, and they go into this reverse tilt, right? they go into this extreme tilt whereby they can't think straight. They'll be like, oh, I've lost 50K already today. Oh, let me just go for buy a full margin of 40K for each position. The truth is, the market will usually reward them by even 5K, and then they won't see that as